Hey everyone, John Henry here, SSFTG Slingshot Futures Trading Group. Welcome to this video. Today, we're going to be taking a look at POCs, but in a little bit of a different light. Normally, when you hear me talking about POCs and where traders are, I'm usually referencing it more in the sight of trapped, right? If I'm looking at a POC, I'm taking the assumption that those are traders who are on the wrong side of things, and that's just because that's how I analyze the markets. But what's really cool here is if we flip the script a little bit, we can actually utilize this in both ways. I like using it from more of the trap perspective because that fits my style of trading. But if you wanted to look at it from the perspective of those are the traders who are on the right side, that can sometimes also give you a very big heads up as to what's going on. Here I have a chart of Apple. This was on the 9th, so this most recent Friday here. And when we had this open, they started off at 9:30. This is the 9:30 candle, typical 5-minute charts. And after we've plotted a good 15 minutes, what do we see from all of that action? The majority of the action, or the POC, took place here. Well, if we look at where we are after the first 15 minutes, disregard everything else that happened here. The POC is way up at the top, and we've got a bull bar, bear bar that failed at the lows, and another bull bar closing strong at its highs. If this is POC from the short perspective, this looks fantastic from the way that I analyze markets because it looks like they're just about to get ready to get ran over. But if we take a step back and we think about this from the perspective of traders who are correct, if this POC is where their money is and they are in a trade, well, then we need a bit more information as to what that trade is. If they're short, they're not going to be very happy. And if the market's going above them, then, well, they can't be short. We're looking at this from the perspective of them being correct. So when we go into bar 4 and we go one candle further, we can see that the POC actually lifted a little bit, but now we've got strong bull bars closing above. Well, okay, if these are buyers, assumably that the market's going up, and the POC is underneath it and they are correct, then we should see some form of defensiveness coming in at around the 143.42s. And in the same light, we should continue to see the bulls work their way up until we start at least hitting another POC shift. And that's where we could potentially see, well, if there's a POC shift, that may mean that these traders who are correct, who bought into this move and are on the right side of the market, that's where they will have exited. So if we take that mindset and we continue this further forward, realistically, bulls are still long in this move until we see a POC shift. And we keep going, the POC stays down there, and now we have a POC shift. Now, let's see where that actually shifted. All right, let's go back one more. All right, the POC did not shift on this bull bar. It actually shifted on the bear bar. So when the bear bar turned lower, we saw the POC that formed up at the top. The assumption here then would be that the longs who were long down here above this kind of bar 3 bull bar transition, they're starting to exit up here. This is their profit target. This is kind of like trade in, trade out. That doesn't mean that they can't go a little bit further. There may be extended profit targets, and we can further see those extended profit targets by seeing the POC shift once again. So if we keep that mindset going further forward, the POC currently now is at 144.40. So we'll keep this going further forward and pop it up to the highs, see if anything changes up there. And now we have another POC shift that's up at 144.96. Another potential area where traders are taking profit. Again, looking at it from the perspective of traders who are long, we haven't seen a reason that traders are really short. And if this is a POC from the short side, they might have some viability here when we broke back down, but they failed and rotated higher. Again, we're looking at this in the assumption that these are traders who are on the right side of things. So given the story that we just had, the longs were in, they took some profit. Now we have maybe shorts building in, but, well, they're still wrong. So again, taking the assumption that this POC is demonstrating traders who are on the right side of things, then we have to look at it from, well, these obviously are bulls. What's going on here? They begin closing above, they pull back, bounce off of it again, demonstrate more support. So we're seeing more supportive action going back to the upside until we see the POC shift again. The assumption is that these bulls are in. So again, keep that mentality of you're a bull, you're a bull. Now we're coming back. Now put yourself in their shoes, right? Let's back this up just a little bit before the POC jump there. So we already know that we're kind of in sketchy territory, right? If these were shorts, they'd already exited. And assuming that they are longs, they're coming back down really close to their break even already. Like, I mean, at this point in time, like, okay, you know, and we're talking right here on this bear bar, they're starting to churn down. We've got some nice bear bars. Like, wait a minute, there's a chance that this whole thing starts disappearing. So if we analyze that a little bit further forward from a longs perspective, we've got the next bear bar and then this one. And this bear bar, all of a sudden the POC jumps up. Well, it was almost as if they're like, you know what? Nah, I'm just kidding. I don't want to be long anymore. I'm going to cut it while it's still actually worth something, and they jump ship. So here again, given the context of what we saw, assuming that they were the correct side of things, right? That told us what was going on here, a little bit of fear. And now we see the transition back lower. Now, this is a really good example of how you can use it on both sides of the fence. I know that I'm always talking about it from the counter trend side of things, the traders who are trapped and they're building in, because that's just how I see things. That's how my brain operates. That's how it functions for me, right? But looking at it on the other side of things, you can still make the whole story work. This is the beautiful thing about the markets. It doesn't matter what way you're approaching it from. As long as you're analyzing it properly, the story will be laid out for you regardless. So hopefully you found this one useful, interesting, and maybe just a different way, a different lens that you can look through the next time you're looking at a POC. Maybe they're trapped, but maybe that's also their entry point, right? What would they be thinking? It allows looking at both sides of the coin a little bit easier, I think. Hopefully, again, you found it useful. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. Don't forget to drop a comment below with those questions as well. And don't forget, too, we've got that giveaway going on our road up to the 2,000 subscriber mark. So with that around the corner, we've got 3 more giveaways to go at this point in time, and I would love to record another one sooner than later. So make sure to subscribe. Tell your friends to subscribe. Even if they don't know me, subscribe, whatever, so we can get that next giveaway going. And until then, we will see y'all then. Thanks.